Helium is often overlooked by investors, but it's a critical industrial gas with growing demand across everything from semiconductor manufacturing to medical imaging and even aerospace. So, could one of the market's most overlooked helium companies also be one of its most undervalued? I am Ricky Lee, and I'm joined today on the Capital Compass by Big Sky Industrial, formerly US Energy Corp, following its recent corporate rebrand as the company sharpens its focus on industrial gases, particularly helium. Backed by a growing resource base, a strong balance sheet, and a long-term helium offtake agreement with an investment-grade customer, Big Sky is positioning itself as a differentiated player in a market where reliable North American helium supply is becoming increasingly important. Joining me today to discuss the company's strategy, financial strength, and why management believes the market may be undervaluing the story is Ryan Smith, President and CEO of Big Sky Industrial. Ryan, it's great to have you back with us.
Hey, thanks, Ricky. Great to be with you. It's an exciting time for the company, so I appreciate the chance to walk through the audience through the story.
And I appreciate you taking the time to take us through it. So let's start with the rebrand. The company recently transitioned from US Energy Corp to Big Sky Industrial. What does that change represent, and why is now the right time to reposition the business around industrial gases and helium?
Yeah, I mean, the name change really reflects who we've become as a company over the last few months. Big Sky, and formerly known as US Energy, was a legacy oil and gas producer for a very long time, multiple decades. And over the last 2 years, we've built something fundamentally different, which is an integrated industrial gas and carbon management platform that is anchored by our Big Sky Carbon Hub in the state of Montana. Helium is a federally designated critical mineral, and demand keeps climbing across semiconductors, aerospace, military defense, and healthcare, and all the really big industries that are projected to grow exponentially going forward. And the reason now is the right moment for all of this is really simple. That we're at a point in our project where it's not really aspirational anymore. We've reached a final investment decision and made great progress on the last phase of our necessary infrastructure. We've fully funded this phase of our development, and we've locked in a long-term customer. So Big Sky Industrial is a name that finally matches the business that we've built, and just as importantly, a platform that we can scale for years to come.
And Ryan, one of the themes highlighted is that Big Sky may be undervalued relative to its position in the helium sector. What do you think investors are missing about the company today?
I do think we're undervalued. I think the market is still looking at us through an old lens, which is the legacy oil and gas multiple, when the business underneath it has really changed completely. What I don't think is fully appreciated is that we have 3 independent, durable revenue streams sitting on a single integrated asset. Like, first, we have helium, which is very topical right now in the global markets. It's a critical mineral, long-term take-or-pay contract already behind it. Secondly, we have our carbon management business, the Section 45Q tax credits, which is a bipartisan federal incentive that is written into law for permanently sequestering CO2. And then third, still oil. We put that same captured CO2 to work, recovering increased oil from a nearby legacy oil field that we own 100% of outright. And what I also think gets very much overlooked is everything I've described is really just phase one. We've assembled an extremely large platform in Montana with a resource life of more than 50 plus years. So this first phase is really just the first increment of a much bigger asset base. And most of that upside simply isn't showing up in the stock yet. So, our job, my job here, is straightforward to continue executing our project and let all of these catalysts speak for themselves.
You've also reported strong financial results and recently secured a 5-year helium offtake agreement with an investment-grade customer. How do those milestones strengthen the business and reduce risk as you continue to grow?
Yeah, I mean, that agreement that you just mentioned, it's foundational. It's extremely important. Before we produce a single molecule, we already know who's buying it and at what price they're buying it at. The agreement is a 5-year take-or-pay contract with an investment-grade global industrial gas company, one of the largest helium buyers in the entire world. And take-or-pay means that they're obligated to pay for the volumes whether they take them or not. So it's contracted cash flow, not really, hope for cash flow. And the pricing is fixed and all in at the plant gate. It escalates annually with inflation, and the customer carries the downstream transportation and purification costs. It's also, in my opinion, a very strong third-party validation of everything that we're doing. A highly, highly sophisticated global buyer did real diligence and committed to buying all of the volumes from phase 1 of our project, which is also still leaves meaningful future volumes uncontracted for us to sell into what I believe is universally forecasted into a very tight market. For a company like us that's moving rapidly towards commercial operations, that combination takes an enormous amount of risk off the table and makes the whole project underwritable and bankable.
So, Ryan, beyond helium, Big Sky is building out a carbon management business, capturing, transporting, and using CO2 anchored by the Big Sky Carbon Hub. How does carbon management fit alongside helium in the company's strategy, and what makes it a durable revenue-generating part of the business?
Yeah, I mean, carbon management is really the engine that ties the whole asset and the whole ecosystem together, because the captured CO2 itself is a very valuable resource. Our entire helium extraction and processing activities create a large volume of natural CO2 right alongside the helium process. And we capture that, 100% of that, and we monetize it in 2 different ways. First, we permanently sequester CO2 that we capture underground and earn Section 45Q tax credits, a federal incentive with very strong bipartisan support that's well established and written into current law. And second, we take that same CO2 stream and inject it into a nearby legacy oil field to recover crude that otherwise couldn't be produced. And that crude oil is our third revenue stream. Very importantly, in that process, the CO2 stays locked in the reservoirs, so it's never vented out and into the atmosphere. What makes this all durable is that it's long-dated cash flow on infrastructure that we own and control with decades of production ahead of us. So we're not choosing between helium or carbon or oil. It's one integrated hub producing 3 streams of revenue with plenty of room to grow. And we think it's, both good stewardship of both our investors' capital and the environment as well.
And so finally, Ryan, looking ahead over the next 12 months, what are the key milestones investors should be watching as Big Sky continues executing on its strategy?
Yeah, a few very clear markers. The most important near-term catalyst is EPA approval of our MRV plans, the monitoring and reporting and verification framework that unlocks the 45Q carbon credits. We expect that during 2026, hopefully more on the front end of that timeline than the back end, though it is subject to the agency's review process, which unfortunately I do not control. But beyond that, we're executing on the phase 1 build under our fixed scope construction contract and moving towards first commercial production targeted for the first quarter of 2027. I think investors should also watch the enhanced oil recovery side, because that's, as I mentioned, the third stream of cash flow that's layered on top of the very same asset. And because phase 1 is funded, we can convert construction into commissioning and ultimately into cash flow without needing to raise dilutive capital to get there. And as that all comes together, we'll be advancing planning for future expansion, because what we've discussed today, phase one, really only taps only a fraction of the resource, and the runway to scale from here is very substantial. So there's very clear and tangible upcoming milestones that turn this story from a plan into a growing, highly economic and scalable platform as we move forward into the years ahead.
Well, Ryan, thank you so much for joining us and walking us through the Big Sky industrial story.
Thanks, Ricky. We're excited about what we're doing, so always happy to come on and talk about it.
Well, for more information, you can visit bigskyindustrialinc.com. I'm Ricky Lee, and this has been The Capital Compass. Thank you for watching, and I'll see you again next time.